Good morning, traders. Welcome to the weekly Elliott Wave Street update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. We are going to make a good exercise regarding liquidity on the markets today in order to explain how these markets move and what will be the plan for the upcoming setups on the euro. Then we're going to check the S&P. Don't forget to sign up on elliottwavestreet.com/membership to one of our memberships to get the daily reports Monday to Friday with videos, with charts, and more, and the Members Academy, of course. All right, so let's start talking about the euro. On the euro, we have been seeing these strong candles going down. Last week, I tried to buy the euro. I bought the euro actually at this area with a 30 pip stop loss, and I have that loss because I was expecting here the completion of the movement on the euro and the beginning of the move up. So this was actually my only loss during the month of September, and now we are going to look for the next trade. But I wanted to share with you that I have the trade that didn't work on the euro. So let's talk about the liquidity of the market. When you are seeing strong candles, big candles, would you like to buy those candles? Would you like to maybe go long here or at the middle of this candle or here or here? No, of course not. Do you don't want to be in front of a train that is going in your direction and you're in front of the train and the train is going, let's say, 300 miles per hour, and you don't want to be in front of that train, right? That's crazy. So these big candles, like these ones or these ones on the euro, happen because the big guys, the liquidity providers, they did the withdrawal of liquidity. Because any reason, maybe because we were seeing last week the bond market going down, the yields going up. Well, for any reason, they withdraw the liquidity. When you are seeing that kind of price action, you don't want to buy. That's crazy. But then liquidity started to show up again, right? So we were seeing some buyers. We were seeing the big guys providing liquidity again. And price goes down, bounces up, goes down. Now we're seeing commercials. Price goes up, and we have accumulation at the lows. Accumulation, and that's different. You see the difference from trying to buy after withdrawal of liquidity and trying to buy when we have some liquidity and we have some accumulation. But then what if you have some buyers showing up here? What if you have some big candles happening here? So when you have that, it's telling that you have buyers. So now you are not guessing when the big guys are going to trigger. Now you have the big guys on the left. The next step, ideally, we should have a lower low, and once it bounces from the low, we can buy it. Or if price goes down in a three-wave sequence and it fails to continue lower, we can buy it here. Let's move this theory on the euro. Let's move this theory on planning the trade for this week on the euro. So we have all the story of a big move down. Now we have buyers, right? So now we need a discount, and the discount is going to happen if price moves back here. So if we have the price coming down here and rejects, that's going to be our entry. Right here, we are going long. If price moves down in a three-wave sequence, on the other hand, A, B, C, we're going to buy here. But the price action will be completely different in that case. So this will be telling that the price is not going lower and price is ready to start climbing if we have this failure, if we have this ABC, if we have this failed auction. So we have to be ready for any of these scenarios. And I like to go with a 30 pip stop loss, either here or here. And that's it. Simple, right? All the analysis ends with a simple entry. And of course, here the plan will be to have the reversal and the euro going down. However, this will be more a day trade rather than a swing trade. So in that case, will be better if you're looking for the day trade. It will be better to have the price coming down, coming up and failing and reversing, and that's going to be the trade. Like the same process here, but here. Or if the price makes the high and reverse, that will be the trade, for example. All right, so that's the plan for the euro on the weekly chart. I'm looking to find the end of wave B in order to target to the previous wave A. So actually, this is a fantastic thing, the thing that happened last week, this additional leg down, because we are having a better price and our bullish trade is going to make more money. Let's have a look at the S&P. On the S&P, we have been seeing the S&P doing a big sell-off. It was able to reach on the index, this is not the ES, this is the index, the 4272 area. And price started to bounce from the lows. So it was an absorption, it was a rejection. A lot of things happened at this area. People who were long with an active trade, the stop was here, so they take them out, right? Some traders also start selling because breakout of support, of course, right? That's something basic on any trading book. Sell at support. I believe it's a huge mistake, and they are trapped, right? And the institutions were clearly buying at the lows. So that's easy to find and it's easy to see after the fact. But remember, our business as traders is not forecasting where the market is going to turn around. Let that part for the institutions. We don't care. I don't care if it bounces there or lower. Of course, here comes a validation. But now that we see these buyers, we have two options. We have two scenarios. The first scenario is having wave 5 and then a 3-wave sequence, and we are going long here, right? At the low. Or the second scenario is having a price doing an impulse, so here will be the same, but here an impulse, and making a lower low, and that would be fantastic. But I don't think that the big guys are going to give us that setup. But if they do, I'm going to buy it here at the market low. So entry here or entry here, that's the strategy for this week. And today expecting a high on the S&P to complete the 5-wave sequence, and that will confirm better the blue scenario. Because if price starts falling today, let's say that we have a big red candle here, right? Then we will activate green scenario to buy here at the lows with the commercials, with the banks. And the target, of course, the previous high. All right, traders. So that's the plan to start this week on this free weekly video. If you want to get access to the whole video with all the markets and additional comments, visit elliottwavestreet.com/membership. Pick your membership. We have trials this month, so you can sign up for any of the plans, and you are getting education now as well in the Members Academy. I am adding new lessons. This week I'm gonna add the lesson in the Elliott Wave Street crash course about corrective waves, to find out how to label WXYs or ABCs. That's going to be part of the training that I'm doing, and I'm adding lessons inside the membership. All right, traders, as always, it's a pleasure. I'll see you inside the membership. Take care. Bye bye.